Hello everyone, this is Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of October 16th. Each week I go through the same process looking at major indices, how they're performing, market health indicators, recent watch list and trade performance, sector performance, and that lets me know how aggressive I'm going to be during the week in terms of deploying capital. So heading into this week, market conditions are poor. We'll discuss in this article or in this video why that is and what would potentially change that. So that means I'm currently holding off on deploying capital on swing trades until conditions improve. And this is because I mainly deploy capital on the long side. And since conditions are poor, you could consider some short trades. But in terms of buying positions, holding off on those, there are some watch lists that you can monitor. The best swing trading stocks watch list for October, or the best swing trading stocks list for October, is simply stocks that have been performing well, high momentum stocks, relatively strong compared to the market the last few months or so. The current stock watch list, which has not been updated since conditions turned poor in August, is actual trade setups that are forming since the conditions have been poor for some time now. That one hasn't been updated because I'm not actually looking for individual setups to buy, as I mentioned. This best swing trading stocks list does have potential short trade stocks that are really weak and dropping. So that's something, if you like to trade on the short side, you could check out that list. You could also check out the best performing ETFs and the best performing stocks. Those have also been showing strength recently on some different time frames. When conditions are poor and declining, that does not mean that I am totally not doing anything. I do actually buy some stocks that I think are good longer term investments when the market's declining. So you can check out some of these, the buy the dip stock list, buy and hold list, and the best long-term dividend stocks. So those are more investing type. You can take advantage of the pullback by buying some of these quality names. In terms of how the indices are doing, I look at the NASDAQ 100 tech stocks, S&P 500, which is large U.S. companies, the NYSE Composite covers a wide array of stocks, industries, different sizes, and the Russell 2000 covers smaller companies. So by looking at those four, really gives kind of a comprehensive overview of how the U.S. stock market is doing. Then I also have the Canadian index over here and Bitcoin just for fun. And we can see since kind of summertime, July, August, we have been in this pullback. The NASDAQ really strong run up through the first part of the year, and then we've been in this pullback, much more visible on an index like the NYSE Composite, which again, large array of industries, different size companies. So this is more an indication of what the average type stock is doing. And you can see pretty big pullback we're in. S&P 500 pulling back, and yeah, we're going to pull back. Nothing to get bullish about yet. This is the Russell 2000 small caps all the way back to 2023 lows. So just in basically a big range, kind of like what the Canadian market was doing as well, just going up and down and up and down. We talked about this last week, this potential for a big false breakout, which we got. It has moved back up into the old range, and if we continue lower, this is usually a pretty good sign. If it pulls back and then starts moving up inside this old range, I usually like that as a potential trade setup when I'm day trading or swing trading. But in terms of an index doing it, it just lets us know that, yeah, maybe we got some short-term upside. But before I would start investing capital, I would need to see basically all these indices start to move up. And we'll also look at the market health indicators. Those usually turn quickly and let us know it's time to start buying again. So no tradable signals on here, just information that we're pretty much in a pullback on everything, and we would need to start moving up and building higher swing highs, higher swing lows before I'd get back in. Right now we have a low here and a lower low, lower highs, so we're in that pullback short-term downtrend. Bitcoin bounced off the potential low of this range, but we've kind of stagnated there, so this would need to move above this little range or what we call a consolidation, short-term sideways movement to continue back toward the top of the range. So overall, from a price action perspective, everything's dropping. This is why I'm not deploying capital. Everything's in a pullback. I don't like trying to pick the bottom of pullbacks. I'd rather wait for that uptrend to start before I start buying in again. Let's look at the market health indicators. And I've included a little bit more data on here going back 2022. We can see the downtrend, and then 2023 we've had this uptrend. We are in this pullback as mentioned. So this tells us how many stocks are above their 50-day moving average, a very crude measure of how many stocks are in uptrend. So the red line is S&P 500 stocks, and the blue line is all U.S. stocks. So you can see about 23% of all U.S. stocks are above their 50-day moving average. Only 26% of S&P 500 stocks are above their 50-day moving average. So that means if you flip that around, that means about 75% of all stocks are below their 50-day, which is, again, a crude measure of a trend. 75% are in short-term downtrends right now. Not very conducive to making money on the long side. You can see when this is above 50, we tend to have uptrending periods. When it's below 50, we're either sideways or moving lower, like we are now. Volume not really important right now. This is the one indicator, this blue one, these little blue lines, that is positive right now. This is daily average movement of the S&P 500. When we aren't getting big drops, that's more a sign of uptrending behavior. You can see back in 2022 when we were in this downtrend, just lots of days with bigger than 2% drops. This red line is a single day 2% drop, and you can see just loads of them. And that stopped in 2023. We had a few in March that almost got to that 2% level, and since then it's been, pretty low movement. And uptrends are marked by lower volatility, more complacency, and so that's good. We have not had any big sell-off days, so that's somewhat encouraging for the indices. It doesn't tell us, hey, jump in and buy, but it is saying this is probably likely a pullback in a major uptrend until we start seeing big drops. If we don't see those big drops, then we might just drift lower or sideways, but we're still probably in this overall uptrend because downtrends have these big down days. This one here, also a frowny face. It is the advanced decline line. How many stocks are advancing minus declining stocks is a cumulative number, and we are trending lower, just basically along with the S&P 500. Sometimes this will give us some early indications that there's some underlying strength or weakness, but this one's pretty much just moving with the indices, so it's not really telling us anything. It's just trending lower, which isn't great. And this is up volume divided by total volume. Just lets us know if there's really big enthusiasm jumping into the market. I watched this lower line. This means 10% of all volume that occurred in the day was in stocks moving to the upside, and this is 90% of all volume. 90% of volume that occurred in stocks moving higher. We have not hit 90 or 10 in some time, so there's no signals there. So we have some frowny faces and one smiley face. Overall conditions not great. We know we are not in an uptrend. We are in a pullback, and so may as well wait to see how this resolves before we jump in. Want to see those higher highs, higher swing lows. Ideally see this move back above 50. When that occurs, we'll likely see this advanced decline line also moving up. Sectors on the move. Basically just energy. Energy's really kind of been the only thing that's holding up okay on all three time frames over the last week, over the last month, over the last 3 months. And I'd also say communication services just kind of hanging in there as well. Second in terms of 3-month performance. Top in terms of 1 month, but it's still negative. But it didn't do very good last week. But it did hold its ground at least. So even though it's kind of at the lower end, these are all pretty evenly matched in terms of their position. So energy the strongest. Utility is more of a defensive type sector, which I don't usually end up in too many swing trades with utilities because they don't move as much. Real estate did okay over the last week, but consumer or communication services, still held its ground, not too bad. So those are probably the two ones we'd be keeping an eye on right now, mainly energy. So what am I doing right now? Still sitting in cash. In terms of long positions, this has been the story for basically this entire decline. In August, I started pulling, saying I'm not buying anymore, and that's worked out quite well through this decline, kept us out. And I also day trade the Euro USD and stocks. What I like about that is that it gives me something to do every day in terms of trading, because as you can see, swing trading, there's sometimes months where we have no trades or I'm out of the market. If you trade both the long and short side when you're swing trading, you'll have some more opportunities. There's also the opportunity to invest, as I discussed in some of those stock lists, like best performing long-term, or not the best performing, best long-term stocks, buy the dip stock list, best long-term dividend stocks. Those are ones that I like to buy when the market is declining. And passive investing, which is a little bit different, that's just buying ETFs that, you know, the S&P 500 has a 100-year track record of producing about 10% a year. That doesn't mean you're going to make 10% every year. Sometimes you make 30%, sometimes you lose 20%, sometimes you're up 10, sometimes you're down 15. You know, it all evens out, but overall the average is up 10%. So passive investing just takes advantage of that. We put a little bit of money into these ETFs each month. So I'm also doing that regularly. So there's some trading activity always going on, which I like, and I think, you know, if people who want to be sort of career traders, you need to find a way to generate some cash flow from your trading sort of all the time so that you don't have these stagnant periods. You don't have to, of course. You can try to load up when the market's really good and take advantage of those brief opportunities. I prefer to do that as well as try to generate some cash flow through all market conditions through investing, swing trading, and day trading. So that is your swing trading stock market outlook for the week of October 16th. Have a great week out there.